Hello, everybody. I hope you're all doing well. My name is Andre Beckles, and this is the March version of Pump the Brakes. If I take a moment back, just for anybody that is new, I am an independent financial consultant with Harari Wealth Management based in New York City. Today is March the 18th, and what I want to touch on ever so briefly is how you spend money, the cost when you're associated with spending money, the employment situation here in the United States, and then finally some economic information with regards to returns on your money or potential returns on your money if you are an investor. Most importantly, I hope everybody's doing well. I'm doing well. It's always good to be on here and talk about things, all things money, economics. So let's jump into it. The first thing I want to talk about is retail sales. And then the second thing I will talk about is inflation. The third will be unemployment. And the last will just be touching on some economic information. That being said, retail sales. This report is brought to you by the Census Bureau for the United States, and they do the reporting of retail sales on a monthly basis. So if I take a look at retail sales, and pardon me, I'll just look to my right at my queue. Retail sales for the month of February, that was up 0.6%. That's 0.6. That was for the pardon me, yeah, 0.6. My bad. Yes, from January. From January. I was looking at it, I was like, is it January? Is it February? Yeah. It's up 0.6% from January. And let's see what else is out there. How do people spend their money? Oh, they spent roughly about $700 billion in the month of February versus 696 billion. So nearly about the same, a little bit off in the month of 700 billion in the month of February, 696 billion in the month of January. Pardon me for repeating myself. Non-retail sales were up 6.4% from last year. Food services and drinks and places of entertainment were up 6.3%. The largest spends or expenditures that I saw taking a look through the report were on building and materials and gardening. We're in the spring months, so that is to be expected. You also have a lot more housing and also refurbishing within housing. So that is a key thing there. I saw that it was up 2.2%. Motor vehicle parts up 1.6%. Auto sales up 1.8 and gasoline up 0.9%, just about 1%. So this is all for the month of February. That is retail sales. Really not much there. The report is pretty straightforward. You take a look at it. There's some key areas, but more of that information is really inside the CPI report. And with that being said, CPI is where I will then move on to. CPI is also known as the Consumer Price Index. It is one of the key things that the Federal Reserve looks at when it's monitoring whether to raise, maintain, or decrease interest rates. So that's also known as the Consumer Price Index. And that report came out on March 12th. If we take a look at that, you can see that a lot of inflation, there's a lot of inflation out there where you choose to go out and eat. There is some disinflation, that meaning prices coming down, and you can see that inside the supermarkets. Now, the CPI is brought to you by the Bureau of Labor Statistics. I'm not going to go through the entire report. It is a more lengthy report than the retail sales, and I just give you an idea. If you want to know where you should cut back or where prices are, yes, you can get a gauge. I go into the supermarket. I used to always talk about the prices of avocados, and that gives me a gauge as to one of the things that I'll spend money on. You can look at sugar, you can look at milk, you can look at eggs, so on and so forth. But what you should really do, if you really want to know about inflation and what things are costing you, go to the Bureau of Labor Statistics and you can take a look at the February report. But I will say that it was up 0.4%. And if we look at it year over year, for the past 12 months, that means that we're up about 3.2. Now, the Federal Reserve's target is 2%. So we're still a ways away from them. What does that target really mean? That is one of the economic leading indicators that the Federal Reserve looks at when they're looking to either raise or lower interest rates or not do anything. So as I said, there's still inflation out there, and to give you an idea, let's look at some of the higher costs. I'm going to run through them very quickly. Shelter is still one of the things that is going up. I don't have to really tell many people that, but to be cognizant of what's inside the report, I looked at various things so I could share them with you. So higher shelter up 5.7%, rent up 5. If you're renting, it's up 5.8. Motor vehicle insurance is still torrid. If you own a car, you have an idea of prices going up. You can look that up. There's many different stories out there as to why insurance prices have been going up. Some of it is theft. Some of it is just the cost associated in more dense neighborhoods with accidents. But you can look that up online. Up 20.6%. Veterinary services up about 8%. I definitely know that. I have a new pet. Her name is Serafina. And heck, I just came back from the vet a few days ago. And I did bounce one compare and contrast one vet versus another locally so that I know what I'm going to pay for. But up 8%. Sporting events up 11%. Sporting events, springtime thing going into summer, more people are more active going out to events, up 11%. Daycare up 5.5%. Tax prep up just under 10%. Parking fees and tolls, so that's something that you look at really on the state level, but it's falling into that inflation, up 4.5%. Motor vehicle body work up 6.7%. You can look at that attributed to the parts, but also the labor costs that's there. Water, sewer, and trash up 5.5%. If you live in a neighborhood where you own a home and you're paying for those such things, or if you're renting, that is built into it. You may think that, you're not paying for either of those three items. You are, in one way or another. If your rent is going up, that is one of the contributory factors. Food away from home up 4.5%. I cook a lot at home, so I don't have to pay that extra cost. Baby food up just under 9%. Food at home, so you go into the supermarkets, things of that nature. If you look at it on a consolidated basis, but if you look at the report, you'll see the disinflation where prices are going down on many items or where prices are going up. But food at home up 1.1%, eggs down 17%. So inflation, definitely, we still need to get that number down. Doesn't mean that the Fed can't lower interest rates. But to give you an idea, if we edged up a little bit on the CPI report, up 0.4% to 3.2 versus where we rose in February versus rising 0.3% in January. That is something that the Federal Reserve is definitely looking at. And there's a meeting this week. I'll touch on that in just a moment with regards to interest rates. So what's next? Employment, unemployment in the month of February. That report came out on March 8th, and that's called the unemployment report for the month of February. And that can be found also with the Bureau of Labor Statistics. There was an increase to unemployment rate to 3.9%. We were at 3.7 in the month of January. Jobs gained 275,000. Where were jobs gained? Healthcare, government jobs, social assistance, transportation and warehousing, food services, and the rate rose by 0.2%. So we're at 3.9 at unemployment, and before it was at 3.7. Unemployed people rose by 334,000. We're at 6.5 million people unemployed at this point in time. If we look last year at the same period, we had 6 million people unemployed. The rate is very low. You can look at the report and it'll break it down by gender, it'll break it down by race. You can even delve into by state. So if you're really interested, Bureau of Labor Statistics. Labor participation, meaning the amount, percentage of people that are out there participating willingly into the economy is at 62.5%. And that's been pretty steady for the past 3 months. Again, where did I see jobs? Healthcare up 67,000 jobs, government jobs up 52,000, food services up 42,000, social services up 24,000, transportation up 20,000, and construction up 23. That just gives you an idea. The report breaks it down even further. What's next? Average hourly earnings. So the amount of money that's earned on an hourly basis was up by 5% to $34.57. This is a broad consensus. Some people make more, some people make less. And that's following a raise in January by 18%. So many times the raising of salaries, can be inflationary because that's all built into prices. So that is something that I bring to you just to make you aware of it. It doesn't mean that I don't like to see people making more money. If you're working hard, you should be compensated for it. So that is the inflation report. Let's go to the economics. Let me just make sure I have everything. I know I'm zooming through. Yeah, economics. So we talk about economics right here. We're talking about the various indices and where I want to touch on where the markets were as of last Friday. So that would have been where the 18th here. So it's about, say, the 15th. Yeah, 16th. So yeah. So if we look at last Friday, and this data is brought to you by MarketWatch, the Dow Jones year to date up 2.7. If we look at the S&P 500, that's a broader base of stocks, up 7.25. The NASDAQ, that's even a broader base and even more technology based. That is up 6.4%. Usually I see the S&P 500 a little bit behind the NASDAQ, but we have had a sell-off in the past few days. I'm not talking about a lot, but the market has been down for a few past few days. So with that being said, NASDAQ up 6.4. The Russell 2000 is pretty much flat. That index is made up of only small size companies. That's up 0.6%. The S&P, not 500, but the S&P mid cap 40, that's up 5.1%. So that's made up of mid-sized companies. If we look at the global Dow, that's up just under 5%. And then we have the global markets, that's Morgan Stanley EFA, that's up 5.4%. So that gives you an idea of where the markets are as far as the stock side. As far as interest rates, by and large, it's been pretty steady. If I just touch on very briefly, just saying, what's going on inside the bond market. So whether you own U.S. government bonds, if you own corporate bonds, or if you own muni bonds, by and large, they've been pretty flat because we have not had much movement thus far early into the year. So if you own bond funds that consist of either government, corporate, or municipal bonds, they are by and large flat, meaning little movement here or there on the negative or positive side for the year. And lastly, let's just touch on economics. What's going on that's going to make or shape which way the markets are going? Federal Reserve is meeting, today is the 18th, so it's the 19th and the 20th. With that being said, they're meeting and going over various economic news that I just touched on to make key decisions as to whether to increase interest rates, lower interest rate, or maintain the status quo at this time being, waiting to see more information that comes in over time. My opinion is I don't see them lowering interest rates just yet because we still see high inflation. The if we take a look at the unemployment or the employment number, that is still by and large pretty strong. I mentioned the rate is around, say, 3.9%. So it is still a strong number that's coming out month to month. So I just believe they'll stay status quo. And we'll talk about, they may touch on, I won't say they will touch on inflation because questions will be asked later on about inflation. What's next? What else is going on? Self-directed retirement account. So whether that be a traditional IRA, a Roth IRA, or a self-employed plan, your contributions are still being taken in for the calendar year 2023 because it's not April 15th yet. So if you're filing taxes and you're looking, especially for your traditional IRA, where you may get a tax credit for it, or for the SEP-IRA, the self-employed plan, you may be looking for a tax credit. Remember to make your contributions. Remember to talk to your tax preparer to see if indeed you're able to get a write-off on those contributions of any kind. Keeping in mind for the Roth, maximum contribution for 2023 is $6,500. Excuse me, I have this little bug. If you're 50 years and older, then the maximum contribution is $7,500. That's for the Roth and the traditional IRA. And the SEP-IRA, the self-employed plan, the maximum contribution is $66,000 or 25% of compensation, whichever is lower. Example, made $100,000 as a self-employed person. 25% of that is $25,000. So 66,000 or the lower of the two numbers. So it's 25,000 is your contribution that you can make for the year. So that touches on the IRA. As far as investing, all I would say is if you are an investor and you're still making or you're making contributions, or you're looking to come off the fence and make an investment, do so. You can do so at, just as I always say, the key thing, you invest based on your risk tolerance, your time frame for investing, and most importantly, make sure that you have a diversified portfolio. Diversified meaning, I touched on when I was talking about the stock indices. You have the large size companies, you have your medium sized companies, small size companies. You have what also you can consider domestic, global, international markets. Same thing can be said for if you're investing in bonds. You have high quality bonds, lower quality bonds, sometimes called high yield bonds. You have 3 different areas where you can invest when it comes to bonds, or 4, so to speak. Let's just say you look at the government bonds, whether it be domestic or global, or international for that fact. You have corporate bonds, which the companies can be domestic or global or international for that fact. And then you have municipal bonds, which will be domestic in kind. Generally speaking, you're buying bonds from within your state. So those are the key areas. Those are areas you can buy short-term bonds, maybe having a little less volatility in price and less sensitive to interest rates, or long-term bonds, which will have more risk associated and more more volatility in price. So that's just to give you a little idea of a way to diversify your portfolio ever so briefly. What else? I think that's really it. So again, my name's Andre Beckles. I want to thank you for spending some time. You got to the bottom of this video. I am with Harari Wealth Management. This is called Pump the Brakes. Most importantly, share this video, like this video, and peace be with you. Take care until the next time we speak.